What's going on, you guys? Charles here from the Traders Corner. Today we have a very quick video as our friend Amber is actually going to start posting her trading through our page, our YouTube page. So I hope you guys enjoy it, and I know you guys are going to find some value from it. There's a lot of things in terms of technical analysis and just trading wise that I've picked up from Amber in terms of lessons that have really served me. So I know there's going to be some value out there for the rest of you guys. So she's going to take you through some quick analysis that she did a week ago or so, and then kind of how it turned out. So I hope you enjoy it. Hopefully provide some value to you guys. Thanks. Charles here from the Traders Corner. Today we have a bit of a quicker video, but it's going to be a very important one because it's something that I think not a lot of people know about when it comes to looking at the stock market or thinking about the stock market and the moves that the stock market makes from day to day, right? So that idea or that concept is the idea of what is market breadth. So what is market breadth? Market breadth is essentially the idea of not just the fact that the S&P, NASDAQ, Dow Jones, as we can see here on the screen, are going up or going down. Right now they're going down. And it's like October 11th when I'm recording this, 2022, and today they were going down, but it's how many of these stocks are also going down with it, right? Not only with it, what do I mean with it? Well, let's take the S&P 500 for example, right? And we can see here I have the components of the S&P 500 pulled up. All right, well, the S&P 500 is made up of 500 stocks, right? And it's made up of the 500 most quality stocks, or as the S&P says it, right? That's their criteria, whatever that criteria is. They have their own criteria for what it takes to get into the S&P, but it's made up of the most quality stocks, right? And so that being said, it is made up of 500 stocks, but they're not all equally weighted, right? The S&P company itself doesn't equally weight the stocks. Like, it'll put the companies in, based on its weight is basically based on its market cap. And so since its weight is based on its market cap, then a company like Apple with a massive market cap, like $1 trillion market cap, or at least at $1 trillion market cap, it's going to get a much larger weight, as we can see here. So what does that mean? Well, if Apple goes up, then it might be powerful enough on that day, depending on how much it goes up, all this kind of stuff, its weight at that time, it might be powerful enough to drag the S&P up with it, while every other stock is going down. Now, Apple would have to command a lot of weight in that sense and all this kind of stuff, but it's a possibility, right? That's the idea of unequally weighted indices, right? So that being said, well, what's a way to look at this and understand, well, yes, the S&P 500 is going up or down, but is it being shared across the board? Is kind of the market on a broad scale going up, or is it just one or two stocks going up or down, right? And again, the way to look at this is the idea of market breadth. Now, there are a few different ways that you can look at market breadth. Some quicker than others, some that you can check kind of daily, others you can't really check daily, but they can all be kind of equally important. But I think the idea of market breadth itself is just an important concept to understand. And obviously, this isn't just about the S&P 500. This is kind of transferable to any indice that you might think about, like the FTSE 100, the NASDAQ, as we were looking at, Dow Jones, all that kind of stuff, right? Russell. You can think about it in that sense, and not only just with stocks as well. Like, you can kind of think about it too with kind of like, if you think about it with Forex, right? Let's say if we're looking at USD versus other currencies, right? And we're thinking about USD versus the other major currencies. And let's say that Aussie USD is just ripping higher. So it's really, really strengthening against the dollar. Well, one thing we might look at the breadth of the basket of the other major currencies, right? So we might ask ourselves, well, yes, okay, Aussie is ripping higher against the dollar, but is New Zealand sharing in that rip? Is yen sharing in that rip? All this kind of stuff. And that might lead us to different conclusions about what might happen with yen, Aussie, whatever. You know what I mean? And you can think about it not only just with stocks. So it's a very important concept to understand. When I learned about it, I was like, I don't know why more people don't talk about this. So I definitely wanted to call it out to you guys. So I hope you guys enjoyed this. Hope it provides some value to you guys. And join us again next time, man. Thank you.